Huge crowd here tonight, but I truly do think it's about quality over quantity sometimes. So thank you guys to those who came out. I do think that we are going to have a great presentation, hopefully, especially you guys that are looking to expand more into private lending. You learned some things here tonight that you can take with you and will help you build more wealth in your real estate career. Now, for those of you guys who don't know me, my name is Haley Gant. I'm one of our IRA specialists here at Quest, and I work very closely with the rest of our marketing team to basically help coordinate and put on all of these events for you guys. It's kind of funny, we're in a transition period right now to kind of really bring back and rebrand these in-person events. So we were really gearing up for a big grand opening event in August. And then, as you guys know, Delta kind of changed those plans a little bit. So we were actually able to host that big grand opening here in Houston, but had to cancel it in our other cities. So this event, this Self-Directed IRA Social, is basically our new monthly mixer. We're rebranding it. It really kind of kicked off this quarter. And definitely come back because it'll grow. We'll have more people here. And as you know, things kind of get more and more relaxed out there. Traditionally before COVID, we host some really big, awesome parties and networking events in this office. So definitely excited to see you guys here tonight and hopefully at more of our events in the future. Now, I do just have a couple of quick announcements for you guys before I bring out our vendors that are here with us tonight. For those of you guys who don't know who we are at Quest Trust Company, basically what we do is we help teach people how to use their old 401ks and IRAs to invest into real estate and other types of privately held assets. Instead of having all of your retirement funds in the stock market or mutual funds, it's a really great way to diversify your retirement portfolio. If you guys did not get a chance to speak with Kurt Power, he's not in here right now, but he's a really big guy that was out at the Quest table out there. Yeah. He's bigger than me, so yeah. But be sure to talk to him. He actually specializes in helping our new clients get started, one-on-one consultations, pretty much any of your really tough questions that you have about self-directed IRAs. Kurt is your guy. We can all answer those for you, but he's a really good point of contact to ask those questions day to day. Now, we do host a lot of events. I do have a few flyers for you guys that I'll kind of pass out after my quick announcements here. This flyer right here pretty much has everything you need to know about all of our upcoming events. Most of them are still online right now, but we do have the monthly mixers that we'll be hosting in this room on the first Tuesday of every month. And we'll kind of be alternating the topics, bringing out different guest speakers, so we can always keep it kind of fresh and lively for you guys. If you guys have questions, let us know. I think that's pretty much about the end of my announcements. So I did invite out actually two of our vendors here tonight, the Wealth Club and ILS, who actually has an office right here in this building. So at Quest, we definitely understand that we are only one part of your power team when it comes to building wealth in real estate. So I want to invite both of you guys up here, kind of give a quick little pitch about who you are, what you do, and the awesome event that you also host here in this office. So go ahead.
All right. Hey, guys. So glad everybody came out tonight. Glad to see you. And I'm Steve. This is Susan. We have the Wealth Club. And the Wealth Club is about giving education in how to become a real estate investor. We give education in all kinds of different avenues, things that you can do as a real estate investor. You know, we can wholesale, we can rehab homes, we can have rental properties, owner finance, mortgage notes. There's tons of things we can do. And we try to give the best education about how to go about doing that. We're not going to give you a bunch of fluff. We're not gurus. We're just going to tell you how we do these things because there's no secrets out there. One of the programs that we've started that I just want to point out, I'm going to be doing consulting for people that want to be passive investors. Over the past couple of years, it's always, people come to me after the fact, and that's generally not a good story. So I want to start doing more consulting to new investors that want to be passive investors in ways to put your money to work and keep it as safe as possible. How to vet your borrowers, how to vet the deals, how to go out and find the deals. There's all kinds of things that we need to be looking for, but what if we don't know, we don't know. And that's how we get sucked in to a deal that goes south or really bad. So we don't want that to happen. So you can, we've got some packets here about the Wealth Club. And so you can always get a hold of us at thewealthclub.org, or you can call us. I got to look at the phone number here because we've got too many phone numbers. You can call the office at 713-644-3500. Would love to talk to you guys. And if anybody wants any packets, we got some here and be happy to hand them out. We got more outside. And thank you, Quest.
I will also say they host a monthly meeting here in our office on the last Thursday of every month. You guys last week packed it out. It was standing room only in here. It was really exciting. But yeah, Natalie, come on up. Natalie with ILS, you had to travel pretty far to get here tonight.
I mean, that whole flight of stairs, they killed me, I tell you. So I'm Natalie with Investor Loan Source. So a lot of you guys know us as a hard money lender. But what we also have, besides our fix and flip loans and all of our diversity and gamut of loans, is we also have like equity funds and notes and things of that nature for placing your money. So as they talk about different ways of placing money, we are an avenue for you guys, and we'd love to explore that. And like I said, I actually have some folders here that include not only our term sheets, but also some information about ways to help you grow your wealth as well, because that is a goal of ours also. Not only do we want to help you guys get the properties you want with the money, but also let you grow your wealth as well. So if anybody wants a folder, just let me know. I'll be happy to give one to you. You can visit our website at ils.cash. That's www.ils.cash. Or give me a phone call at 713-904-3431. And like I said, if you want a packet, I'll be happy to give one to you.
I've always been curious what you have to do to change your website from .com to .cash. Guys must be doing something right over there. All right, so without further ado, I'd like to go ahead and bring up tonight's main speaker, Nathan Long. He is the president of Quest Trust Company. And tonight is one of my favorite presentations because it's basically about how you can get passive income, being the bank, and kind of learn how you can flip this scenario and also get unlimited sources of private lending for your deals. So Nathan, come on up. Let's give you a big round of applause.
I looked at that wine out there, and then I went into Quincy's office and broke into this 2013 Napa. And I figure whenever he's missing it, I'll just tell him Ben, the new guy, did it. You know?
Is the door still unlocked?
Yeah, I think it is. How's everyone doing? This is kind of funny how we ended up with this speech. Is Haley said we should do a speech about, how to raise private money, or do a speech about private lending, and they just kind of combined them, and I was like, oh, okay. So honestly, help me out. I know a lot of you out here. Are most of you looking for money or trying to place your money? What are you trying to do? It's usually one or two categories. A lot of people placing their money. Okay, because I kind of made this speech for both people. Like, hey, this is what you do if you want to loan your money and some things, and this is what you do. And the problem with this topic is I could probably speak for about 3 weeks if you let me do it, because I've been lending for a long time personally, and I'm pretty good at it. And the way I got to be pretty good at it is I did a lot of really stupid things, So maybe you can learn by some of the things that we do. Again, Quest doesn't give tax, legal, or investment advice. We don't endorse any products. We don't sell anything. We make our money processing transaction fees. So when you guys do a good transaction, we charge you a fee. Guess what? When you do a bad transaction, we charge you a fee, right? My whole point is we are actually legally obligated to process all transactions as long as they're not prohibited. So make sure you're taking the time to do your own due diligence, all right? There's plenty of horror stories out there, and pay attention to them, because they are real. Real quick, I'm going to go through the little basic stuff real quick. I'm going to do this 900 miles an hour. If you guys haven't heard this, we have whole speeches on it, but a self-directed IRA really isn't a type of IRA, right? We just hold private assets at Quest, where other companies hold publicly traded assets. Most of my clients have an account in both places. They have an account with Charles Schwab and an account with Quest. And the reason is because the cash just sits there with Quest. You can't really do anything with it. So it's better to have an account and move it back and forth and know how. A lot of people use Quest for diversifying. I think over this last 18 months, a lot of people are really pleased with having Quest accounts and diversifying. All of our education services are free to you, whether you're a client or not. And we spend a lot of time talking about tax savings. It's not the fun part of real estate investing, but it's a very important part of it, and wealth building. And I think that most of the time when people are investing with a self-directed IRA, it has a lot of social impacts. You're basically investing in your community and things like that, rather than maybe spreading your wealth over a large group of people. But I think the most important thing is allows you to invest in things that you know and understand. all of us have different life experiences. So some of my clients are doing oil wells because that's what they know a lot about. Other people do rental properties. They're really good at it. I'm horrible at rental properties. I just hate them. My mom's so good at it. Rambo, I don't even know how she's so good.
You love the first couple.
Yeah, I mean, I did. I mean, they've been good to me. They're just so much work, you know, on the thing. So, on the thing. There's all different types of accounts that can be self-directed. If a self-directed IRA isn't a type of account, what can be self-directed? Well, we break them up into different categories: personal and employers, specialty plans. And a lot of people don't understand that you can use these accounts differently or combine them together to create one investment, which is really fun to do. The largest account is actually the traditional IRA. That's what most people put their money in because that's the old 401k, 403b. But we have Roth IRAs, SEP IRAs, simple IRAs, solo 401ks. And one of the most exciting products that we're dealing with right now is health savings account. Anyone bought a house in a health savings account? I know you have, Haley. So it's a lot of fun. It's weird, but you can do it. But the real trick to some of these, and covered education accounts for the kids, the real trick to using different accounts is learning, like I said, how to partner them together. If you take an account, you guys, who knows Haley in here? Have you guys had a chance to talk to her? All right, Rambo, I've known Haley since she's been about this big, because she's Eddie's girl, right? You know what I mean? Yeah, that's right. But I mean, and you might have met my son too. If you would have seen Haley and my son at 18, they weren't the bright people full of investment knowledge. They were like every other 18-year-old kid you would ever see. But what we did as parents is we'd take our little Roth IRAs and we gave them some money and started to invest with it. We partnered it with our money. What a great way to give an education, because they don't listen to you talking. You realize that. At 18, you cannot say anything that they're going to actually hear. You've got to show them with things. And you know, and honestly, I don't know when you picked it up, but Derek didn't pick it up right away. It was 23 or 24. It was like several years. I didn't think he was ever going to get it, but once it clicked, he like clicked it. I think it was about the same for you, right? You did your first real estate deal at 25?
Yeah, with my IRA.
Yeah.
As soon as I started working at Quest. I almost started the year before, but I missed the deadline. True Haley fashion.
Yeah, I won't say anything. Right. So there's all types of investments you can do with an IRA. Today, what we're talking about is being a lender. All right. And I'm going to talk to you a little bit about my experience as a lender. For those of you that are online, what you can do is ask any questions. I have Ben at the top of the room. You just type them into a chat box. He'll stop me in the mid of this thing and let it know. We have a small group here, so you can ask whatever questions, anything that's pertinent to you, make a thing. These are my rules that I do or try to do when lending. And I made these rules over a period of time, and they're just things I want to talk about, right? I do always break some of my rules. And sometimes I regret breaking them, but sometimes there's reasons to too. Because when you are a private lender, it is a private negotiation between you and the person. And sometimes the reason that you're in that position is because they can't go to a normal bank, right? I know I had a loan, I did one house. You know, the bank wouldn't loan me anything because there was a hole in the roof. Of course, it's about the size of a Volkswagen. You know what I mean? This whole, but I knew this was a classic house for the right person with the right skills, which this person had. They could fix it up and make a lot of money. It was in San Antonio, in the Kingsland area. It's kind of a classic area years ago. Things like that. All right. So as I did this, there's some things that I like to do, especially if it's the first time I'm going to loan with someone. The first time I loan with everyone, to me, it's like a first date. Everything is extra tuned, extra special. I have lenders now, I will tell you, that I will loan them money and I've never looked at the property. And I never intend on looking at the property. But that's because I have a very long-term relationship with them that goes back, or I'm in a guaranteed situation, right? I will sometimes go to a hard money lender, not in the funds. I actually have them put me on each. I buy out their notes and deeds of trust from the hard money lender. They service the loan and they get a portion of it, But the big thing is when it goes into default, I have an agreement with them that they'll buy the loan back. Okay? To me, that's worth a lower interest rate at this point in my life. If you ask a younger Nathan, right, I wouldn't have wanted to give up that interest because A, I didn't have as much money, and B, I had more time. So it kind of depends on who you are, what you're doing, what your skill set is, and how much time you want to put into it. But I'm talking about first time doing it right. Someone comes to me at a Quest event and says, hey, I got a house over here, I want to loan money. Well, what are some of the things that you're going to do? One of the big things that I like to do is make sure that I look at the property beforehand and often look at the property as I go through. Typically, when I'm loaning money on a thing, I'll loan the 100%. Everyone understand what the thing. Some people like to have skin in the game. I'm okay not. I think if the investor comes with enough, a good enough deal, right? I don't need skin in the game. I honestly don't. I'll pay all the money it costs for them to close. I'll pay all the money for costing for repairs, but I escrow those. Everyone follow what I'm saying? I want a set of repairs done, and I immediately send someone out to check out what's going on. And so if I can't see it, I'll send someone else out, someone I know, especially if I'm like lending maybe in Beaumont or something like that, which has been the thing lately because it's been harder to lend because the prices are going up so much. I think that's really important, and it's also really important for you to do two things if you're going to escrow repairs. You need to sit down long beforehand and talk about what the repairs are that are going to be done. And then understand that you may have to be flexible. For example, for a rehabber, they might say, okay, I'm going to fix the slab, then I'm going to fix this, and I'm going to fix that, but then one contractor's not lined up and it's not ready to go. Everyone follow what I'm talking about? You have to be, they want to get this other one done, but as long as there's some work being done, you can cross it off. I think it's okay to release money out in those ways. I always talk to my borrower about the total amount of projects they have, right? I loan a lot of money over the years to Tom. I've loaned a lot of money to Eddie over the years. ILS lending, that was the young lady that was up here, right? At one point, I turned around and I looked and I realized I had like, between me and other members of our family, we had like $1.5 million out to one lender. You know what I mean? Just because it was convenient. His deals were good. He liked thing and da da da. You know, at a certain point, you have to cut yourself off, and I should have cut it off long before then. Never had a problem with this particular lender, but I think that's risky. So I also talk to my lenders about other projects that they have going. If I'm talking to a borrower that has a lot of projects, I ask for what's called cross-collateralization. Do you know what I'm talking about there? Your attorney can cross-collateralize several of their projects, so if they have a problem with this one, you can actually put a lien on one of their other projects as well. All right? And that's helpful if you're talking to a guy with a whole bunch of projects. That might be one of the ways that you can protect yourself. If he starts to have some bad projects in there, you actually have a lien against his other projects as well. So something to think about as you're going on. I always do a 1-year loan, or shorter sometimes, but typically it's 1-year loan, because sometimes even if they say, oh, I'll be done in 6 months, it can go a little bit over. It doesn't mean I won't renew, right? Because a lot of my people are lending, but every year I want that ability to talk about a few things. What is it I want to talk about? Did you pay the taxes? Is the homeowner's insurance current? It also forces me to go look at the property. I've had loans that went out 7 or 8 years. People paid their loans all the time, and then all of a sudden they stopped. I thought, huh. I went and looked at the property. It was trashed, right? I hadn't looked at it in 8 years. It wasn't worth what I had owned on it. So I've had that as a situation before. So by doing the 1-year loan and letting them know I'll renew if I need to, that really things. It also gives me an exit and a negotiation point. What happens if the market has drastically changed over the course of the year because of something silly like, I don't know, COVID, you know, right? You know, it gives you a chance to go in and talk to different things and renegotiate your situation. And it keeps your relationship going with your lender or your borrower, which I think is really important. Never ever own on a piece of property that you don't know what to do with if they stop paying. I remember one property, it was really good, it was up in the Woodlands. This young couple, they were so cute, they were dancers, Rambo. They were professional dancers. They were foreign born. They were from Australia. And so they couldn't get traditional financing, and they were very happy to get my financing. And they had a great plan. What they found is this pretty big property, had a house on it, and what they're going to do is they're going to fix up the house, and then they were moving in shelled out, brand new mobile homes, but they were shelled out. Nothing was in them. It's just the shell. And they stacked a couple of them up, and they made it into luxury dog kennels.
Oh, this story.
Oh my God. They were killing it. They were killing it in the Woodlands with these luxury dog kennels. So they came in and they said, Nathan, we want to put some more of these on the property. Would you give us a little larger loan? Looking at the property, it's worth all this money. I'm looking at the thing. I'm looking out there, all this stuff. I said, sure. In Quincy, we put some more. We got some more family money together. We put some more money. That's actually the time when I entered the deal. It was on the second round of funding, and all this stuff. Everything was going great. They were making their payments. They were making money hand over fist. And then they were deported to Australia for not paying their Australian taxes. Right? They were gone, and here it is. And by the way, that was 11 years ago. And this year is the first year I don't own a dog kennel. So just something to remember. Even though there's lots of equity, am I wrong? You got some of those stories yourself, right, Kurt? So sometimes it's just a matter of, do I really want to own it? Like, there's a lot of money to be made in the hood, but there's some places in Houston that a skinny guy like me doesn't belong. I'm just going to point that out. Guy in a bow tie in certain areas ain't going to make it very far, right? For me, I like that sweet spot, not too expensive, not too hot, and I think that works for a lot of people. But the whole idea is, I know what to do with that property in the event it defaults. Does that make sense? And no matter how much equity it has, if it's in another state, it might be very difficult to, especially if you're not familiar. I've made that mistake. Next one, listen to me, guys, girls. Don't loan to your friends. Not unless they're your friends like Eddie Gant's my friend, right? I've known him for 20 years. We've done business together for 20 years. I will loan him money. He would not be shocked at all if he did not pay me and I foreclosed, right? He would know that's coming. We have that type of relationship. But typically, what you want to do with your family and other members is you bring them into your fold. You allow them to loan with you. You never borrow those money. Shakespeare had it right, Borrowing does create a lot of problems in those situations. Never loan to your girlfriend, never loan to those things, even though they're not disqualified persons. We see that all along. Patrick, you could actually answer to this one. I am always shocked at this. It is, when you do have a problem, take action immediately. I have seen, you're going, It doesn't get better, does it, Patrick, if you wait?
If you have an injury and you rub at it, it just makes it worse.
It just makes it worse. You just keep hoping. But it's a thing with retirement accounts. A lot of you have already done this in your life. You had your 401k and you opened it up and it's not doing good. We'll just put it in the drawer till next year. Maybe it'll get better next year, I'll just wait a year. People do that. And the problem with lending or self-direction is it's self-direction. If you don't do anything about it, I have one client, Patrick, I'm not kidding you, that did not receive payments for 6 years prior to them doing something about the loan.
They don't like confrontation.
They didn't like confrontation. The guy kept saying, he was just a good talker. Oh, I'm having some issues. I'm going to take care of you. And it wasn't until the property was going into foreclosure because of unpaid taxes, and we got a notification that Quincy literally went and grabbed this guy by the scuff and says, come sit down in my office. Let me explain to you what's about ready to happen. And the property still had more than enough equity, even though they were very trashed and stuff, to cover his things, and he had things back. But the whole point is, as soon as it starts to go bad, do something about it. One of the easiest ways to do something about it is know the attorney that drafted your note and deed of trust. All right, and I'm big on this. My wife's my attorney, so I know her pretty well. But if you just go to a title company attorney, which a lot of people do, you don't have anything. If you go to a local attorney that is a real estate attorney that's just drafting documents, what's going to happen is that same attorney can help you whenever the loan goes into default or something else. And it makes it. If you're a borrower, guys, my God, nothing makes you more trustworthy than introducing your lenders to an attorney. Say, this is your attorney. They're going to foreclose on you, right? Or foreclose on me if I don't pay you. They work for you, though I'm paying the fees to draft the documents. Rambo, help me out here. Does that work? Huh? It's persuasive, right? I mean, you always do a lot to ensure that your lenders are being paid back and that they feel very comfortable with you. And you've been doing this a long time. So, if you don't know or you're not sure about a loan, don't take the borrower's word for it. You know, check it out. And don't use his comps. Look at his comps. And then go talk to somebody in that area. A great way to find somebody to talk to is the Wealth Club or some of these other clubs. You can probably find somebody that's professional in that area, and you can say, hey, what do you think about this loan? Da, 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 da. Get a second opinion or a third opinion. It really does help a lot. I can tell you there's several times that say. The other thing is on a first loan, you ask I usually don't require an appraisal. I don't know if other people do, all right? On some weird cases, I will, if it's just a really weird property or something like that. But I usually I won't require it. I'll just look at their comps. I've got enough experience. I can look at comps and kind of tell if they're, if I look at some comps and a borrower has provided me poor comps for his investment, what do you think I do? I literally run for the door and I will never see that person again. Borrowers, pay attention to your comps. Don't ever over-exaggerate to look good for your lenders, right? Lenders tend, especially experienced ones, tend to be very conservative, right? And if they see you being conservative with your numbers, they'll like you, trust you, and lend you more money, right? Yeah, remember? Sure, sure. Do it in the microphone, do you mind? So the people online can hear?
When I first got into real estate, maybe
Which was a while ago, right?
yeah, maybe we'll say 12, 14
You gave
years
up law
ago.
for it, right?
Pretty much. It's more fun here.
Yeah, definitely.
But I used making loans as an opportunity to learn the business from the inside out. And so when someone would come and, let's say, borrow $100,000, including repair estimates, I considered their comps, and then I would hire a realtor or someone I trusted to give me their CMA, their competitive
You
market
certainly learn
analysis.
people's character very quickly that way, don't you, Rambo?
And it didn't cost very much.
Right.
But I remember very distinctly about to make a loan on a property, and I went and I visited the comps. And what I realized was the comps that really justified the value were in a different neighborhood
subdivision.
and a different feel. And it was not truly comparable.
For those of you in other cities, I don't know if you realize that Houston, like, location is location. I mean, in Houston, you can have a street, and one side of the street is literally $10 million properties, and right behind it is the hood, you know?
Exactly. So when I looked at that loan, I said, do I want to buy this home for $100,000? Because that's what's going to happen if it defaults. I'm like, no, I don't.
Again, these are my rules. I get it, other things. Here's the thing. Always close at a title company, and always ask that you get a lender's policy on your title. Okay? And the reason why I say that is the title policy protects the borrower. Anytime they go for the bank, there has to be a lender's policy on there. It's not very much as an expense. And the whole idea is that in the event of default, that will cover you against title as well. Same with insurance. This is so important. You want to verify that they have insurance, but more importantly, you need to verify that you're listed on there as a lender. Why? Anyone know why?
Because when the payoff comes, you want to get your share.
That's right. Now, I can tell you, Hurricane Ike, what happened there in Houston many years ago is the insurance company just was on the fast lane of cutting checks, right? They had to get the money out. Everyone remember that, right? Well, they would cut the check to you and the lender. So that way you can make sure the repairs are getting done. They have to have you sign the check in order to cash it. If you're not on there, they just give you them the check. Well, some of these rehabbers are like, okay, I'm going to make $20,000 if I finish this rehab on this property, or I have a $70,000 check in my hand. You know what I mean? And that happened to a lot of people. So I did see that.
That's kind of like, honey, I won the lottery. Pack your bags.
Yeah. So I actually saw that in some very sad cases. You know, it's also important in other cases. I had a very good real estate investor that had a lot of loans to people died, and some of the loans were in there personally. You know, and that's one of the things that helped to show that you have a right or stake in that property is also how it's insured, all the other things on there. Ooh, that was a mess. Jim Kennedy, when he passed away. You know, good investor, just a good guy, you know. Ooh. So, always check the property taxes, especially if you go over that December date, right? Always ask, hey, can you show me that you paid the property taxes? And then after they showed you that they paid them, what do you do?
Verify it.
There it is, Patrick. You know, again, experiences, it teaches you a lot, doesn't it, right? All right. Sure.
Yeah.
Regular comment. In my closing packet, I want to see a tax certificate.
Yes. And I think the times I've gotten in problems with it personally was when I extended the loan, right? I extended the loan off them because, you know, and then they weren't paying it at that point, and I got in trouble there. I've got a property right now that's in a small town that I grew up in South Texas that I was the lender on, and I'm just going to let it go because the property tax that the owner has on it are more than what the property is worth, you know, which is about $3,000, by the way, but that's about all the property's worth. You know? It's like my grandfather loaned these people money like 20 years ago, and they would make a few payments and then miss them, and make a few payments and then miss a few, and here it is 20 years later, they still owe like the same like $15,000 that they originally borrowed. You know, I'm like, oh God, these poor people, just let them have the house. It's in Hebronville, Texas. Nobody wants to live there. I always get a personal guarantee, okay? Most of the time, I really like to loan to an entity anymore. I don't like to loan to the person. I want that person to have an LLC. Can anyone imagine why? What happens if I loan to just John? What happens if John dies? Now, all of his stuff goes into probate, all right? And my loan can be tied up into that for several years. What happens if John gets a divorce? I just did one recently that I was involved in divorce hearings for 9 months. And what was that little town? Oh my God, my wife would have to drive up there. And every time she'd have to get in that car to drive up there to represent me, she would say, you're going with me? You know, to this little town? And the whole way up there I had to hear about it. And the whole way back I had to hear about it. You're not doing this step alone anymore? It's rough, marrying your attorney. Yeah, don't do it, Oscar. But the real problem is, again, back to Jim Kennedy. He had I had several loans out to him when he passed away. When he passed away, it was very easy for me to get title to the property. The payments stopped being made. The LLC didn't die. The LLC still exists. I just went and foreclosed and I owned it. When Jim died, he passed away with no children, no heirs, and no will. Okay, so the probate was several years long, and one of the main witnesses is the state of Texas because it's going into SG. There are some people that are still trying to get their money back from that loan. And that was a good lender, like the properties were. In the meantime, what's happening to the properties?
It's falling apart.
It's just sitting there. No one's taking care of it. No one's doing anything, and other types of things. Some things that you always want to ask. Do I want to be in a second position? Does everyone understand? She's like, no. And normally that's my rule too, Lori, is I like say no. Why don't you want to be in a second position? Well, I would say it would depend on what state you're in. In the state of Texas, if you're in a second position on the loan, the first can go into default. They're not even required to tell you about it. They can default and wipe off your second. They can foreclose and wipe off your second without even telling you. You just one day you wake up and you no longer have security on your property. So, do I ever put myself in second position? Honestly, I do. Okay? There are circumstances. Here are the circumstances that I do. When I put myself in second position, I always make sure it's in an account or a place that I could satisfy the first. What does that mean? That means if it went into default, do I have enough money in my pocket to pay off the first? Right? For example, if it's in my IRA, it might be very limited. Right? Where if it's in a family fund where we all got a little bit of money, we can come up with a little bit of money from somewhere to pay off that first. Or the first is a position that's someone that's closely held to me. My cousin loaned on the first, they have a rehab coming up. The quickest way to get them extra money on the property is to do a second from me, a separate person, right? No problem. Why? Because the first is Forrest, the attorney that shares my office with me. He's 74 years old. He's cute as a button. God, 79, I'm sorry, 79 years old. And I used to work for him when I was 16. So, but now he works for me, and his whole job is just to give me that eye when I'm doing something wrong. The other thing is, do you want your loan to be wrapped? One of my things is I never like to lend to the person who lives in the house. Why? Has anyone done that? What happens when you lend to the person that lives in the house versus I loan to Rambo, the real estate investor? Two things happen. First thing happens is I better make sure that loan is Dodd-Frank compliant. I'm going to have to pay a third party. I've recently did this because I tried to help someone out, and then the person backed out, and I still had to pay that person $500 to make that loan Dodd-Frank compliant as the lender because the borrower can't pay that. So there's extra things. It's also, if I'm going to foreclose on a lender in the state of Texas, it's easy. I go in, you're a lender, I give you notice, right? And the next Tuesday, the house is mine. I have my attorney go down to that crazy foreclosure. They kind of stand in the corner and read some words, and boom, I own the house, right? Anyone have been to foreclosure, an actual one? Yeah, you know what I'm talking about then. So, the fact of there's different steps that occur when you're foreclosing on a family and different things, and it's emotionally tolling on you to hear them say, I don't want to lose my house because of this, right? If it's an investor, it's like, you didn't pay me, get out of there, you know, it's easy. So often, I don't allow the investor to wrap my loan unless he'll guarantee it in the event of default. In other words, he just showed me he's made the loan Dodd-Frank compliant to them. In the event of default, he's going to take care of everything and things, and I get a separate contract that says and does that. I think that's how my wife does it. I'm not really sure. All right. Quincy's the attorney, Rambo, not me. But we both work for Forrest as a kid. All right. Do I want to partner with people I don't know? Some people go around and get money and say, oh, you got $50,000, I got $50,000 from this guy over here. Is that something you really want to do? What happens in the case of default? Who's going to make a decision? There's times that you can do that, but the problem with it is almost assuredly you should go to an attorney and have a full joint venture type of contract written up and not just a loan to protect your side of the interest. And most people don't do that. All right. Questions? from anywhere. Anyone had a problem? Has this stimulated any thought process or things that you're doing? Go ahead.
If I close in a second lien possession, can I immediately proceed to close on out the first lien?
Well, the answer is if I'm defaulting in second, they have to default in first and second for you to foreclose. If they're defaulting on the second,
But not on the first.
right, you can foreclose, but the only way to foreclose is to completely satisfy the first.
Right, could I do that?
Yes, yes, as long as you've got enough money to pay it all off, you're okay. What's your other choice there, Patrick?
Wait until the first decides to sell one day in the future, then have whatever my
The-
added cost goes in?
You can negotiate with the first holder. You can tell them what you want to do, right? And ask them, do you want to transfer that lien to me? If they, you know, and sometimes that will work. Like, hey, I'm going to have to take over this property. I'm going to provide a foreclosure thing. I don't have enough money to pay you off, but I'd like to do that.
Then I have enough money to pay them off.
Then just pay them off and get rid of them out of the
Okay,
picture.
I'm gonna pay you off and this is it.
Yeah, that's, they don't even, you don't even have to tell them.
Okay.
You just do it, right? So,
Well, that'd be a pretty good way to get a bunch of property if you were a second lien on something that was undervalued or overvalued.
right. It could be. Anyone ever have like the lien where you've loaned $23,000 on a $100,000 loan and it defaults? What happens then? Do you get the $100,000 house, typically? What was that? No. What happens? You go to foreclosure and you typically get paid off. That's one of the things that people should realize is that, you know, you very seldom end up with a huge equitable house as a lender.
Because they just pay whatever it is to take over the loan.
Right. So when you go to the foreclosure, there'll be other people looking at that. They'll know that it's out there. I've never thanks. Yeah, Rambo.
You're very persuasive, and the difference isn't that great. Perhaps you can talk them into just giving it back to you.
Yes. Or you could have ghost bidders. Oh, too many years in the auction
You can
barn.
tell it's a good deal because the trustee's really talking in a soft voice.
Oh, yeah. Usually the trustee's an attorney and they don't care. They're just going down there. They're going to do their job. They're going to read this stuff, blah, 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 blah. Ask them whatever questions you can. If you can find them, then they're out of there. All right. Any other problems? Anyone's looking to borrow money? Who's looking for money? Talk a little bit about borrowing for real quick, all right? To me, most people blow it when they're talking about borrowing money. And this is why. Because they're really good real estate investors. And everything that makes you a really good real estate investor is everything that can make you a bad borrower. What am I talking about? What does it take to be a good real estate investor? You take risk, and then you get out there and you dig around, right? And you find the deal, and then you find the contractors. What do? You grind on them, right? You grind down, you get the best deal that you possibly can, right? You grind the buyers, you grind the realtor, you grind everybody that's, am I wrong? That's what makes you a good real estate investor, right? But what makes you good at finding people to loan you money?
Share the wealth.
Relationship building, right? Because if you understand something, there's a major difference between a deal and a person with money. With a deal, as soon as you find it, you better go find yourself another one. Because when you're done with this deal, you'll be unemployed. Everyone got that? With a lender, they will lend to you again and again and again and again. It's like the first date. You got to treat it like a relationship. And most of the time, if you walked up to someone and said, hey, how's it going? My name's Nathan. I could use about $270,000. Do you have that? What do they say? You're nuts, right? But walk up to them and try this. Say, hey, do you have an old 401k, a traditional IRA, a simple IRA, ESA, Roth IRA, SEP IRA, health savings account? You got any of those? Everyone's like, oh, yeah. It's in the stock market and went up and then it went down and then that. Oh, really? I put mine into loans secured by real estate. I make above average return and I can drive by, see it, and touch it and feel it. And this is the great state of Texas. It's really easy for me to foreclose on. I use my IRAs and I lend it to other realtors, you know. And I learned how to do this at Quest. You can go there and check out what they're doing and things. What's happening? Rather than selling yourself that you need money, you're talking to them about education and sharing things, right? And that will builds you more than anything else. Especially, I can't tell you how many times I get done speaking up here and someone runs up and says, hey, I want to borrow some money. What's your rate? I'm like, bye. I'm like trying to step back. I feel dirty even talking to them. Not that I don't want to loan some money to people, right? You know what I'm talking about, right, Patrick?
Well, I almost asked you what your rate was.
Yeah. So one of the things is learn how to approach people less aggressively. And the very most important thing is how you treat them on their first deal. I have an entire presentation, and I don't have time to go through it all here. Like I said, I could talk for weeks, where I just talk about the things that you should say to your realtor. And one of the big things, to your borrower, one of the big things is constant communication, especially at the end of the deal, right? There are no shortcuts to having a good relationship with a borrower. Even if you pay a little bit more than you're supposed to that first time, even if you do those things, that's okay, especially, or you spend extra time with them. My wife's a real estate attorney, and one of the things that she will do is when she first gets a client, she sits down and explains everything to them, like everything that they can possibly want to understand. And she says, I want you to understand this because this is not going to be the first time you're going to do this. You're going to do it over and over and over again, and when you have a problem, do it. And the biggest problem that she has is people come to her and say, I want to loan this guy money. She looks at him and says, no, I wouldn't do that because I don't like the way this and this and this, and these are the things that concern me. And she has that choice either to peace out as an attorney or, now for my wife, she pieces out all the time because she spends my money. She doesn't have to worry about hers. So, yes.
This is off the record.
Yeah. Don't give her the microphone then. It's off the record, no microphone.
Microphone on.
I was feeling guilty because I had some lazy money. So I was getting anxious to make a loan. So I was
Been there, done that.
to make a loan to this new player on the outskirts of town, in a new area, geographic area, right? And it sort of looked good, but I just had a hunch and an instinct. I ran a background report on that person. And for, I don't know, I had a friend, Derek Sims, run a background report.
Oh.
Maybe $50, $100. When I saw that report, I said, oh, that's why I don't want to loan that person money. And I saved myself a lot of money.
Yeah. I wonder who it was.
Don't run a background check on any person before they loan money.
It's, maybe I'm highly, maybe I'm overly skeptical or
No,
suspicious.
you're protecting your money.
Yeah.
And honestly, I'll tell you
I mean,
guys,
if the person you're loaning money to isn't talking to you about one of the most important things, is you want to talk to people, you'll be talking about rate and all this stuff. The first thing you want to talk to them about is how they're going to be secured. What's going to happen to you if you die, right? And that's why a good attorney helps, like an attorney that can actually, because they'll sit down. That leads to a point. You make the process painless and use professionals. You have someone like Haley, Kurt, sorry, Kurt. Kurt, someone that you're comfortable with Quest and come in and say, hey, are you using your IRA? They'll come in and they'll talk to them. You don't have to be the IRA specialist, right? Same with attorney. Have an attorney in your pocket that you use. Have a title company that is familiar with closing these type of commercial type of deals. All of this makes the process painless. It elevates your level of expertise to them, right? Again, you want to talk about insurance. The same thing I was telling you as a lender. Make sure that they have insurance and that you're listed as the lender. If you're the borrower, you don't want them to figure out how to do all this stuff. You want to tell them, hey, I'm getting this attorney for you because he's going to protect you. Hey, we're doing the insurance this way, so if something happens to me, hey, I have an LLC because if I happen to just get hit by a bus, you might run into problems, right? Hey, when I bought the title insurance, I'm making sure that I'm getting a lender's policy on there to protect you. If someone does all of that, how do you feel?
You like them.
You like them. And versus someone doesn't do all that, how do you feel?
You can't trust them.
The other thing I often talk to them about your process. What type of contractors do you use? Are you a small investor? Do you have a full thing? Talk to them about how you make your money and how you have separate exit doors. I think it's also important to talk to your borrower that you are making money. Some people hide from that fact. They're like, oh, I'm not really making money. No, I mean, if I'm lending money, I really want you to make a whole boatload of money because that's the highest percentage chance I get of getting paid back. You know, you got to make it sound good. But always communicate very good. I talked about the comps, but also the repairs, the time of repairs, and doing this. One of the big mistakes some people do when they first get an investor is they get an investor, they got the house, they got it under contract, they closed. What are they doing? They've gone off and applied for a bunch of permits. Their contractors are out working someone else. What's their new lender doing? They're driving by the house every day. And what are they seeing?
Nothing.
Nothing getting done. Hadn't heard a word from that lender. Gave them all that money. Nothing's getting, you know. But if the lender says, hey, at this point right now, just a quick email. What we're doing now is we supplied for the things. We won't be working on the house because the crews or something else. Lender's relaxed. Everyone understand that? You also want to talk about things up front, like when are you going to make the payments? How are you going to make the payments? Are there payments on the first of the month or other things? Because what happens is if you send that to the title company or things and you haven't worked out some of those little details, what's the title company do? They pick up and call the lender and say, oh, how do you want to do this? Or what do you want to do? The lender's never done it before. They're going to be very confused. You want to make sure you're holding your hand through that point. Sure, go ahead.
Yes, we have a question from online. One of our online attendees wants to know, when purchasing land with investor funds, then taking out a bank loan for new construction, the bank will normally want to be in first lien position. I'm a developer, but how can we best protect the IRA lender? Sounds like they'll be in second position.
It's hard to do that, right? Because the only way to really do that is to bring your IRA in as a partner or something like that, using a joint venture or those things, which may not be allowed after this new $3.5 trillion bill goes through. But because anything that you do as a lender, like I said, the bank isn't going to like that if you're a new construction company on there. So I've always done it. I've done plenty of new construction loans, and typically what I'm doing is I'm lending for the entire lot, and then they're subdividing it up and selling off different sections at a time. And they've been able to work that out with the bank because I'm releasing the one lot as they build on it, and then I release another lot, and then they build on it, and then I release another lot. But it can be done, but it's a little bit more complicated. I don't think that's the answer you're really looking for. But so, yeah, what were you going to say, Patrick?
Give me the microphone. I got a similar problem.
Oh, yeah.
So you buy all the land, it's in your IRA, and you've partnered with like the entire family, so there's 6 or 7 IRAs.
Right.
Plus you've just had to put some of your personal money in there, so that's 8 partners with a
Right.
formula. And you've got all the land paid for, you got all the permitting done, you're ready to build, and you're starting to realize you're running out of money.
Right.
So you want to bring the bank in this example, as a partner, but you're limited to like the 5, 10, 20, all the percentages of the IRA and the partnership. How do you have to renegotiate that, or how do you close it out with the bank, or what do you do?
Oh, yeah, because the bank's not a disqualified person. You can certainly either renegotiate the position, right? Or depending on how the joint venture is written, there's all types of ways you can do that. But that's not a problem. As from an IRA standpoint, from a figuring it all out, that's a problem. But from IRA standpoint, there's no disqualified person. One of the best things I would tell you to do, and one of the biggest mistakes I see borrowers make, and we're just about out of time, like I said, I could talk forever, is the end of the loan. What happens at the end of the loan? You're all happy. You send it to your realtor, you got it closed, the people are going to get paid off, boom, you're good. You forget about it. What's the problem? As soon as you send it to the title company picks up the phone, calls the lender, and asks for what?
Final payoff.
Final payoff. If you're a lender that's new, you have no idea actually how to figure a final payoff. This is a very important time for you to sit back down with your lender and be like, okay, this is how much I borrowed, this were the payments we made, which is what we agreed on, this is the payoff, right? Because we're going to pay off the principal and we'll get some interim interest. It's usually pretty simple because most of the time these type of loans are interest-only loans, right? And to you it seems just rudimentary simple, but sometimes they get lost. I'll give you a great example. This person was very intelligent. She was a doctor. She did a hard money loan. Person was a 12% loan, annualized loan. The person bought the house. They did everything they're supposed to do, fixed it all up, did the rehab, and closed it and paid it off without talking to the lender about the payoff. The problem was, she's like, but how come I didn't get 12% interest? I only got 8 over the course of this loan. It was only 8 months, right? You know what I mean? It's a pretty simple thing for people who are used to dealing with it, but somebody, even if they're smart, you know, that's not doing this every day. And once it was explained to her, it's like, oh yeah, that makes sense, you know, but because they didn't sit down and explain to them. And this is a great time to ask some very important questions, and here they are. This is it, and this is something that investors almost never use, this word. It's the word feel. Because we're investors, we don't feel anything, right? But you ask them, let me ask you a few questions. How did doing this loan make you feel? Were there times while you were doing the loan that you felt nervous? Is there things that I did that made you feel less nervous? Is there things I could have done that would have made you feel less nervous? And is this something that you would want to do again? And if they say yes, then it's, and how many of your friends want to do it too? It's amazing how powerful those questions are. Because I guarantee you, the first time they did a loan, they had some very nervous feelings at some point. And just you asking, how did you feel? What did I do? How could I be better? Secures your place as a lender better than anything I've ever seen done. And most people just completely blow like one of the most important steps of borrowing money, which is the end of the loan, sitting down and talking with them. This is the time that you really develop relationships. Am I wrong, Sylvia? You know, think about the good lenders you've lent to over the years and think about the bad ones. And the good ones did what I'm talking about, and the bad ones didn't. Right? Rambo?
My borrowers are good.
Yeah, most of mine are nowadays today, too. All right, guys, I'm done. There's some case studies I didn't make it to, a bunch of other stuff. Like I said, I could speak for years. You want to close them on something like QuestCon, or you want to like sell something or do something promotionally?
How about we give away some things for free?
I'll give something away for
Yeah?
free. Do something like
Y'all
you
showed
do.
up tonight, didn't you?
Thank you, guys.
Let's give it up for Nathan one more time. Big round of applause, yes. Awesome, guys. Well, I always either like to call myself the best salesperson or the worst. I'm not sure which one because I do like to give away some things for free. It's both, yes. And Nathan's gone. You will not see him again. So I can give away all the free things tonight. Anyways, so to close it out tonight, oh, there he is. Last time you walked through that door, we never saw you again. No, I'm just kidding. But anyways, guys, so we are not only hosting our online webinars every single week, as well as this event monthly here the first Tuesday of every month, but we also have a really big online conference that we kind of started hosting after the beginning of the pandemic. If you guys have been following Quest for a while, you know that before COVID, we hosted a really big Quest Expo. We literally had almost 700 people there 2 years in a row, and we were really gearing up for the third Quest Expo, and obviously that did not happen because nothing happened last year, or no big events at least. But now we are hosting an online conference. It's a full 2 days. It's called QuestCon Live, and our next rendition of QuestCon Live will be December 3rd and 4th. It'll be a Friday, Saturday, full 2 days online from 9 a.m. to 4 p.m. And Kurt Power that we have there in the back, we've actually got a contest going on with our different IRA specialists where whoever has the most QuestCon tickets registered under their name by December gets a free trip. They get to go stay in Austin. They get to go stay in Dallas. They get like $300. So if you guys want a ticket to QuestCon Live, they're in pre-sales right now, but since you guys showed up tonight, I really kind of want to do something special for you. I'll give you guys a free ticket. For anyone here tonight that wants a ticket to QuestCon Live, get with Kurt. Either give him your business card or get him your contact information. Kurt, I'll get a piece of paper for you or something because I see some excited faces in here. But guys, seriously, if you want a ticket to QuestCon, it's 2 days, about 20 speakers, and the theme of this upcoming event will be forecasting 2022. So I have actually very painstakingly built out the entire agenda myself over the last 2 weeks, and we're working on booking all of our speakers right now as well. So the whole first day of QuestCon is going to be focusing on where we are right now, how did we get here, what were the biggest wins and losses of this year, and kind of transitioning into day 2 to really prepare ourselves for what are the best upcoming investment opportunities for next year. We're going to have several different panels focusing on the different types of investments that you can do, not only with non-IRA funds, but also with a self-directed IRA, because we are a self-directed IRA company. And we'll also be bringing out some of the kind of top players in our industries to be doing some Ask the Experts panels at the end of each day. So if you guys want a free ticket to QuestCon, I'll give it to you here tonight since you showed up. If you guys are watching online, sorry, you should have showed up in person. No, just kidding. If you guys are watching online and you're really itching for this, send us an email, reach out to us. I might give you a small discount. We'll see how it goes. But for those of you guys here in person, I really do want to thank you for coming out tonight. Quest has been hosting educational events in this office for probably close to 10 years now. Before COVID, we would average anywhere from 80 to 150 people in our classroom. And I guess after this past year, when everyone's been so spaced out, it feels really crazy to think that we used to pack that many people in here. But we have some really cool ideas planned for our upcoming mixers in November, December, January, and kind of moving forward from there. So definitely keep these on your radar. I know, obviously, we don't have a full room here tonight, but we will be growing these events. We'll kind of be packing them out. I have some ideas for some really cool speakers I want to bring in the next upcoming months. So be sure to keep it on your radar. Look out for our emails. And if you guys want a free ticket to QuestCon, get your business card to Kurt or write down your information. All we need is your name, phone number, and email, and we'll get you registered when we get back into the office tomorrow. Our lovely intern Ivy will be registering you. So gotta love interns. They make the world go round. They really do. But guys, that's all I have for you. Feel free to hang out, chat with us, ask questions, and we'll see you at some of our other upcoming events. That's all I got. Thank you guys for coming out tonight. We really appreciate it.